This is a video update for the 1st of November 2017. My name is David Hickson, and I must ask you please, before we take a look at the markets, to make sure that you have read and understood these disclaimers. In our recent Hurst Cycles webinar on the 16th of October 2017, I discussed the trading opportunity that was presenting itself at that time, which was for the S&P 500 to drop down into the 80-day cycle trough. I also mentioned at the time that I thought that the better trading opportunity would probably be to catch the bounce out of that 80-day cycle trough because of the recent bullishness in the market. In today's video, I would like to discuss the possibility that that 80-day cycle trough has occurred. And we're going to be taking a look at charts from our Hurst Signals service. I hope that this video will be of use to our Hurst Signals subscribers, because an interesting situation has developed on Hurst Signals and it bears discussing. So here is the chart of the S&P 500, and of course we have our FLD trading strategy series of interactions between price and the FLD marked on that chart. As you can see, those interactions have been identified, and here they are labeled on the chart: A, B, C, D, and here is interaction E. And so, of course, the Hurst Signals system is expecting the next interaction to be a category F interaction. But now this is where the art of trading comes into play, and we need to carefully consider the context in which this chart is presented. And there are a few things to observe here. The first is that price has come down to this 20-day FLD on two occasions. First was about 2 weeks ago, and the next one was a week after that. And as you can see, if I clear those pin marks, price came down to the FLD and found support at the level of the FLD and then bounced up again. Now, what do we expect from an F category interaction? We expect price to cross below that FLD on its way down to the 80-day cycle trough. And here is the nest of lows showing that that 80-day cycle trough was expected sometime last week, or towards the end of last week, or perhaps even early this week. So that is what we expect from an F category interaction between price and the FLD. The price will cross down below the FLD and come down to the 80-day cycle trough. But let's have a look at the situation on this chart. The first thing that is immediately apparent is that the market is in a very bullish mode. Okay, if we draw our M shape here, you can see it went up like that, and possibly is coming down here. That's a very bullish M shape. You know that because the peaks are late. There's the peak and there's the peak, and they're occurring very late in each one of their up-down moves. Very late occurring peaks are an indication of a strongly bullish market. The other reason we know that this market is bullish is because price has not come down very much to form first the 40-day cycle trough over here, and it came down over here to potentially form an 80-day cycle trough, and it didn't come down very much. So that is by definition a very bullish market. Now, when a market is very bullish, then of course the hour sequence of interactions between price and the FLD becomes distorted. How does it become distorted? Well, the downwards move in a very bullish market is not expected to be very impressive, which is why I mentioned in the webinar on the 16th of October that I didn't expect a very big, strong move down into this 80-day cycle trough because the market is so bullish. Therefore, we shouldn't simply blindly follow the Hurst Signals system and say, oh, well, an F category trade is expected next, therefore I must be standing by to trade short. It is very possible that this 80-day cycle trough has occurred. We did have a nice trough here on Wednesday of last week. It is right above that nest of lows, and so it is possible that our sequence of interactions between price and the FLD has become so distorted by the bullishness of the market that all the F category interaction actually provided us with was a drop down to the FLD, and then the market couldn't go any further down. That is something that we must bear in mind, and it is very possible that we are already witnessing the bounce out of this 80-day cycle trough. So now how can we decide whether indeed this is true? Well, we can look at the evidence of what is happening on some of our other charts. So let's take a look at the Dow Jones Industrial Average. Here is, again, the 3-month view of the DJIA, and you can see the same sequence has been identified, A, B, C, D. E is, of course, the bounce up out of the 40-day cycle trough, which occurred over here. And so, again, the next interaction that we are expecting is the F category interaction, where price should drop down below this FLD and come down to the 80-day cycle trough. Here is our nest of lows for the 80-day cycle trough, and that nest of lows is based around this week. So we don't really have any additional information on this chart that can help us resolve the situation one way or another. But looking at this chart, you have to ask yourself, if price is going to drop down below the FLD, and let me clear those marks, if it drops down this week below the FLD, then we would expect a target the same distance below the FLD as it was above the FLD. So we're expecting a small move down to roughly that level over there. Okay, the 80-day cycle trough is due. So this is likely to happen over a fairly short period of time. Is that the kind of trade you really want to be getting into? Well, perhaps it is if you're trading very short term, but in terms of trading the strategy presented in the Hurst signal system, no, it's not really. We're looking for a longer duration and more profitable, bigger move. So again, I would suggest that you don't take that short F category trade, because it is quite possible that because of the bullishness in the market, and this market has been even more bullish than the S&P 500, as you can see over there, under these circumstances, I don't think this F category short trade is a very good trade to take at all. What we should be doing is standing by for the next trade, which is going to be really quite impressive, I believe, which is the bounce out of the 80-day cycle trough when that occurs. Let's take a look at another chart, and this is a chart of the Nasdaq 100. Now here we have some information that is much more useful. You can see that the cycle shapes are clearer in this instrument. They went up, and down. You can see that that M shape is not as bullish as it was in the S&P 500 and the Dow. And so we have a slightly less bullish market, and therefore we have clearer cycle shapes. This is the kind of thing that often occurs. You will often see it when a particular market gets very overstretched. You should look at the other markets that are closely correlated in order to determine the true cycle picture, or the better analysis. Here too we have an 80-day cycle trough. There's the nest of lows, although that nest of lows is centered around last week, and so it was last week that we were expecting that 80-day cycle trough to occur. What is the average length of an 80-day cycle? You should know that it is 68 days, and as you can see, there have been 71 days according to this bar count over here. But there's a further piece of interesting information down here at the bottom right of the chart that indicates that the current wavelength of the 80-day cycle is 65 days. So in other words, we would have expected the 80-day cycle trough to have formed 6 days ago. Okay, there have been 71 days since the most recent 80-day cycle trough, and 65 days would be 6 days ago, and so that would have positioned that on exactly Wednesday of last week. And so what do we see on Wednesday of last week? Exactly on schedule, according to this analysis, is a trough in the market. Now that is very possibly the 80-day cycle trough. And what is the Hurst signal system doing? Well, the Hurst signal system has already assumed that that 80-day cycle trough has occurred, and it has labeled the next interaction, which is the A category interaction, which is when price broke up above the 20-day FLD last week. The evidence on this chart is very compelling, I believe, to indicate that the 80-day cycle trough has formed. Of course, the 80-day cycle trough won't necessarily form on exactly the same day in all three of these markets, but because they are closely correlated, they are all markets based in the United States, the chances are fairly high that they will occur very close to each other. And when we have a situation that isn't entirely clear, such as is happening in the S&P 500 and the Dow, the evidence that the Nasdaq provides us with, I believe, is very persuasive in terms of indicating that the 80-day cycle trough has already formed. And so, what should you be doing with your Hurst signals? Well, when you receive your email telling you that the category F interaction is expected next in the S&P 500, you must consider the general situation. You must take a look at your charts and realize that, yes, the Hurst signal system is tracking the interactions between price and the FLD. But it is quite possible that we're seeing a distorted situation where, because the market is so bullish, that category F interaction isn't really going to be a usual category F interaction with a clear cross below the FLD. Of course, we don't know with absolute 100% certainty one way or the other. And it is possible that prices will come down and form an 80-day cycle trough next week or later this week even. The important thing when it comes to trading Hurst cycles is not to be absolutely 100% right all the time in your analysis, because if you're wrong in your analysis, well, perhaps that's a little bit of a blow to your ego, or my ego in this situation. I don't mind that. What is more important to me is that I am right in terms of the trading decisions that I make. And so entering a short category F trade at this time in the market, I believe, would be the wrong decision, because it might turn out to be a profitable trade, but the odds are stacked against it. And that is the kind of thinking process that you need to go through when considering your trading opportunities on Hurst signals. I do hope that this video has been useful, and I look forward to seeing you on our next webinar or in our next video update.